Good day to one and all. This is Dr. Sivaraman of inoindices.com. I'll be giving now the Asian session live market analysis on the forecast webinar, which I was supposed to give it yesterday, 21st of November, but due to preoccupied condition, I was not in a position to present it. And today I'm presenting it between 5 and 5:30 GMT. The expected market moves for this week, 21st to 25th of November, and also the range in which the currencies are expected to swing, then the market trading technique along with that of the trading strategy. So my contact details are given here. If you are interested to contact to get further details about the forecast or long-term forecast, etc., you can always contact me. And without adding any strings, I'll be willing to help you. Now coming to that forecast part of it, we are into the last week of the month. The following week, 28th to the 2nd of December, will show the monthly trend reversal. Then from that of the 1st of December till end of January, we'll come across the yearly trend reversal. So those trend reversal moves are going to be highly volatile. So what you come across here in this week, Euro and GBP are near that of the low set for the season, and also USD near that of the high set for the season. And they are expected to make the swing and rise moves. Euro and GBP are expected to make the swing and rise move in order to do that impression that they could recover after that of the Thanksgiving. As I explained last week, that for Thanksgiving, many of the traders liquidated their positions before going on holidays. So the players kept all the market low, giving that impression that USD is expected to continuously gain, so that they will not be willing to carry the position till they come back. So they just liquidate the positions and go for the holidays. And then later on, the players make the move of their nature, and you know that they act against that of the traders once they committed the positions. So when you see in FX trade and other places, everywhere people are telling that USD is the king which is going to gain continuously. But I don't call USD as a king, but instead I call it as a sleeping giant. And this sleeping giant will wake up and make a havoc and again go to sleep. This is what happens every time. And why it happens like this? Because the players create the USD weakening sentiment in the market and continuously accumulate the positions in the case of Euro, GBP, USD, etc., and try to create the feel that USD weakening is unstoppable. Then freely the traders start buying at a higher levels, and once the traders lose their faith of selling Euro and GBP and start accumulating buy positions in Euro and GBP, then the players change their strategy. They simply offload their buy positions in the market when the traders are freely willing to buy at a higher levels, and later on they just allow the market to melt down. This is what happens every time. So normally to rise the market it takes several months, but to drop it in a few weeks or a month, they just liquidate and induce the traders to liquidate as well by making quick drops. So in a shorter time frame, when they make the quick drops, and you find that the market becomes highly afraid of buying any buy positions in Euro and GBP. But when the traders are willing to sell, the players accumulate all their sells and they become long in other majors. This they do it every time whenever you come across the US elections happen. So they have to necessarily do this in order to accumulate huge profit and share it with the respective people. And this is why you come across such massive moves happen. And in 2008, such a meltdown happened during that of the election time. So every time you come across that players quickly gain the levels and then offload and book profit, and that profit is being shared so that they are being taken care of for the rest of the years to come. So the richest in the world have got huge amount of money, and that has to multiply in order to meet with inflation. So it has to earn. So such players, they deploy all the money through that of the private banking arms into that of the market and use it for market rigging, and also use their influence to create all the market sentiments and act against that of the traders so that they could continuously gain the levels and gain the profit. So you find that invariably the market is being manipulated. So we need to understand how they are going to manipulate so that we'll be able to trade in line with them and try to earn money. So my entire forecast is focused on that. So how they are going to make the rigging. So for that, we need to know the timings of the market. And these timings are given it here. And during that particular time frame, what sort of move they are going to do it. They are expected to make the lower level swing and firm up. Then again, higher level swing and slide. That's how yesterday they had done it, and then firmed up during the US session. And today, again, they are expected to make the lower level swing and quickly rise during the late Japanese session from 6 to 7:30 GMT. Then again, they are expected to make the swing and firm up slow gains and quick gains during that of the US session. Then they are expected to gain quickly during that of the Japanese session on Wednesday, and then book profit. And then they are expected to make the slide, swing and slide during that of the European session, and again buy back and quickly gain the levels. And then on Thursday, they are expected to make the slide during that of the Japanese session and firm up and rise during that of the European and US session. Similar moves are expected to happen on Friday. They are expected to induce the long holders of the lower level long holders to liquidate the long position before making further rise. And what you come across now, that USD and gain is unstoppable, but you will come across USD drop is unstoppable. That is how they try to make one-sided move in the case of USD and start gaining the levels in the case of Euro and GBP. As I told you last week that they have been holding Euro and dropping GBP mainly to handle Euro GBP cross and also the European crosses. And now you come across they hold Euro and gain levels in the case of GBP. Again, make further drop in the case of Euro GBP. And then they will continue to gain the levels in the case of Euro and hold GBP and then gain continuously in the case of Euro. That's how they make alternative moves in order to handle the crosses as well. So keep in mind the players handle two pairs at a given time and identify those two pairs which they handle at a given time by referring to that of the initial lows, referring to that of the highs and the low, and wherever the currency which has made more than 40 pips spread between high and low, they are the currencies they are handling. At the moment, they are handling USD and also GBP. And you find in the other currencies, the swing is lesser nature, less than 40 pips. So they handle Euro GBP, Euro USD and GBP at the moment, and then subsequently they will start handling one by one the other currencies by making the spread between the high and the low more than 40 pips. So commit positions in such currencies. So when USDN is near that of the high and not breach the high for more than 30 minutes during that of the late Japanese session, you can take a sell so that it will be able to make the slide and you will be able to book profit. Similarly, when they are not breaching the initial low set in the case of Euro and GBP for more than 30 minutes during that of the start of the late Japanese session, you can take a buy and then quickly book profit during the gain. So that way you can try to do the trades. Now coming to the levels in which the currencies are expected to make the swings. So the low could be in this week 1.06 and they came down to 1.0579 yesterday during the week beginning false move and then started gaining the level. They've gone up to that of 1.0650 now and slowly they are expected to gain the level. And in the case of GBP, they came down to 1.2314. Their low was estimated low was 1.2325, and quickly they are expected to gain more levels. Then, in the case of yen, they went up to 111.19, but 110.75 was their arithmetically calculated high, and they are expected to come down and set the low as 107 or even lower, depends upon the long liquidation. Now they are holding high and building sell positions in the case of USD yen. But technically it will appear that it could go further higher. That is how they create the market sentiment. USD CHF 0.98, they could come down from that of 1.01 level and they set the high as 1.0115 yesterday and then started making the slide and slowly they are expected to come down. Then in the case of Canadian dollar, they have come down yesterday as well as today and set the low as 1.3386. They could come down to 1.32 level and the high could be 1.35. They set the high as 1.3414 yesterday. And in the case of Australian dollar, 0.7311 was the yesterday's low and then estimated low was 1.7325 and they could go up to 1.7650, 1.7382 so far they have done it and they have gained further up to 99. So in all you come across that they set the lows and they are expected to gain the levels. In the case of denominator currencies, they set the high and they are expected to reach the low. So you'll come across in all USD weakening move in this week, but next week they will make all contrarian moves for the monthly trend reversal time, and at that time you could come across that Euro rising, USDN rising, or GBP dropping, USD CHF dropping. That sort of moves they are expected to make as contrarian moves. So keep in mind that when they make contrarian move, even now you come across a contrarian move, but it's a nominal nature. Euro is showing negative net change, GBP is showing positive net change. Euro is showing negative net change and USDN is showing negative net change. These are all the contrarian moves they are making. So they will make such contrarian moves. That means a pair making USD gaining, another pair making USD weakening move, and that is referred as a contrarian move. And overall, they don't make USD gaining or the USD weakening move during such time. So such contrarian moves are expected to happen during next week and then following it during the month of December and January. They are expected to make the yearly trend reversal moves. And during the yearly trend reversal, you will come across very quick extended stop and moves and aggressive moves. And such aggressive moves, normally they make it in order to induce the traders to make distress selling or distress buying and distress short covering or distress long liquidation, and thereby the traders lose heavily. And whenever anybody who has lost their account, we just ask them what is the time during which they lost their accounts, and you will come across 99% of the traders, those who do overtrade, say that during the month end and the month beginning time they have lost their account, or during the year end time their account was closed due to margin call. So The players make such moves mainly to bring in the margin call or close that account and accumulate all such deposits as their profit. Now let us do the market reading. So I noted down the initial lows and the highs in the case of four majors and two commodity pairs. Euro formed the low 1.0625 and 1.0650 is the high. They not breached the low or the high. And yesterday they set the low as 1.0579 and slowly they gained the level. And in the case of GBP, 1.2482 is the low and 1.2513 is the high. Yesterday they have been holding around 1.2314 and 1.2363. So this is how they just slowly gained the level yesterday in the case of GBP, and now they will hold the GBP and gain the level in the case of Euro as a part of handling the crosses, European crosses. Then in the case of USDN, they made an aggressive drop to 110.28 below that of yesterday's low, and yesterday's high was 111.19, and then they came closer to that 110.90 and holding near that of the high, pretending as if it can go up further and breach yesterday's high, so that the traders who have gone short at the lower level will do the short covering and the players are holding and selling. How we will be able to find out that the players are holding and selling? See, it is a very common logic. They hold in either at the high and then sell their lower level long positions, liquidate the long positions, and then why they are not rising above that of the high what they are set? Because they do not want such long holders to book profit in their buy positions. They will induce them to do the buying, especially those who have gone short will try to buy when the technical analysis so that USDN is not going to drop, and then they go in for a short covering and find that it is not dropping, then immediately they will say USDN is very strong and yen is going to become weak in coming days. So they will say that USDN has to gain more levels. Then they take further buy positions and expecting that further gain could offset their losses what they had done during that other short covering. But the players simply hold it without giving the profit for more than 30 minutes to 2 hours when they are holding at a higher level as an extended move and start making the intentional move on the downside. So when they make slow downward move, then the traders think that, okay, it is better to average it every 30-40 pips. When they come down, technically they could see that if you take a lower level buy, it will increase the profit earning possibility. They try to take buy position every 30-40 pips, and then slowly they make further downward move. Once it goes below that of 110, then the traders find that, okay, it is in the wrong direction. Then they think that it will come back because the support has not been breached, and the players simply breach and go down. Then the loss increases for such one-sided traders. So normally when you want to do the averaging, you do the averaging every 150 pips. Then you will be able to earn depending upon the market limitations on a daily basis. But if you do the averaging every 30 pips or 40 pips, then it will lead to over trading. So avoid that. In the case of CHF, 1.0069 is the low they are set and 1.0090 was the high. They just breached the high, went up to 97 and come down. Still holding above it of 1.0090. Again, they are holding here and it is lower than that of yesterday's high and booking profit. In the case of Canadian dollar, it has moved ahead. Normally the commodity pairs lead the rally and lag behind. So they just made the USD weakening move in the case of commodity pairs. 1.3397, they just breached it by 1 pip and holding it. and 1.3424 is the high. They are just not reached it, indicating that they wanted to make further downward move from that of yesterday's high. Slowly they come down so that the traders do the average. Then Australian dollar 0.7365 is the low. They just set it as the low, and 7394 is the high. They breach the high and staying above, indicating that they want to slowly gain further levels. As I said, that commodity pairs lead the rally. To start with, you will come across Australian dollar will gain, followed by that of GBP will gain. Further, Euro will make the gain during the day. Now these are all the recommended trades. So Euro is currently around 1.0625. 26, you can take a buy, keep the hedge order. Similarly, GBP also, it's closer to that, you can take a buy, because around 6 o'clock they will make a small dip for the late session and start gaining the levels. Then Australian dollar also, the buy and sell trade is recommended. Now these are all the market timings. So 6 to 7:30 is the late session. At the time you can take a buy and keep stop at entry and profit before 8 GMT. And 8 to 8:30 they will 8 to 9:30 they will make a small swing as the early session swing, and later on they are expected to form during the European session as well. Then again during the gap time they make a small gain, and then markets start making dip to make swings during the early US session, start gaining the levels till late US session during the day. So I'll come back on 25th Friday and just to review the forecast, what I have given it. And if you've got any question, kindly ask me. I'll be willing to answer those questions. We have about 7 minutes to go. Let me show the forecast sheet for the benefit of latecomers. If you feel like asking any question, kindly ask. Then run. After an extended stop and happens, if the crosses are being handled, are there moves bigger? And if so, how many more pips do you expect than normal? See, normally, you know that extended stop and moves in the case of Euro and GBP will be for about 150 pips. Sometime when they wanted to, they find more stops and less liquidity in the market, then they get the interbank treasury permission to extend the move, but to a close of the session they will make it as 150 pips. So they can do the extended stop and up to 250 or sometimes even 300 pips, and then towards close they will just make it as 150 pips net change level. So that is a normal scenario I have come across so far in the past 19 years. See, initially during that of 1997, 98, and also up to 2000, the players used to make very big moves in the market, like 500 pips, 800 pips, etc. on a single day. And those days, the most volatile currency was USD CHF. So I have seen days wherein they gain quickly about 800 pips in the case of USD CHF. By US session, they simply liquidate all, and USD CHF would have come to that of the negative net change. It gains about 800 pips, drop about 1,100 pips. We do come across on certain occasions, USD CHF has made about 3,000 pips and things like that when S&P was telling that we are not interfering. So you do come across such moves in the case of USD CHF. But those things are all now controlled. And why make the players make such moves? Because the volume is relatively very less. So it is very easy to manipulate. But if they manipulate Euro and GBP, along with them, many traders will make profit, because you come across among that of the traders, some take long positions, certain others take short positions. So you'll find those people who are taken the position in line with that of the market move will go in for profit booking. So they avoid that by looking into that of the less volume currencies. Okay. I have heard you say that USD CAD, CHF, USD CAD and yen move differently during the intentional move without pullback like the rest of the majors. Yes. So what they do is, see, normally when Euro is gaining about 150 pips and GBP can gain about 250 pips in a given day, and normally we all expect that USD yen to drop about 200 pips at that time, showing the USD weakening move. But what happens, they will simply say some other story for USD yen and gain about 300 pips in that and make from those levels a drop when Euro and GBP were rising. So when they do such things, you find the yen crosses massively gain the level of about 500 to 600 pips. So this is what they do it. And similarly, in the case of Canadian dollar, they gain the levels along with that of Euro in order to gain massively in the case of Euro Canadian dollar cross. So wherever the volume is less, they make such contrarian move as one-sided move for a prolonged period. So this one-sided move for a prolonged period, they do it so that when the traders are trapped as a short sellers, they see that predominant of the traders do the short covering, otherwise there will be a margin call. They create a situation of that nature. So if you use hedging, then if you hedge the position and if you just simply reverse the trade and book massive profit in the hedge, then you will be earning substantial profit during such moves. So especially during that of the yearly trend reversal time, during the month of December and January, you will come across massive moves happening in the market. I have seen situations of like Euro dropping about 200 pips, GBP dropping about 350 pips and things like that on the New Year Eve. Similarly gaining. They continuously gain during that of the year end and continue to gain during that of the new year till the first week of new year. They continuously gain and create an euphoric condition in the market and then let loose the market to drop freely till mid-January. So be prepared for the yearly trend reversal moves and trade with the hedge, and during such time simply reverse the trade. You will be able to get out with the net profit. Anyhow, I'll be giving beforehand the expected market moves on when the spikes are likely to happen, etc., and that you can follow it in order to avoid becoming surprised with regard to the market moves. And during that time, you'll come across plenty of rumors being circulated, and also when anybody gives a statement or any event happens, they will immediately exaggerate it as if the world is going to come to an end. They exaggerate it in such a way and make distress moves in the market. You know, when US president election started, they said that when the unexpected person was going to be the president, they simply made the move as if US dollar is going to be a waste paper. Then later on, now you find they simply reversed it. The same person is the president now, but they simply reversed and making all USD gaining more. So this is the way they manipulate the market. So if you don't understand that, then we will be losing money in the market. Any other question, please? Okay, there are no questions. Then I'll try to wind up the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Friday and try to explain to you the expected market moves for the week, how exactly the market has moved in line with it of the forecast or against, so that we'll be able to understand how effectively we can use the forecast for our less risky trades. Wish you all happy trading. See you on Friday.